Hycroft mining has been in trading in a popularity recently, and many of our people are wondering if they should buying or selling that. We have a simply standing on this side and wait for better timing. And as the market is still very volatile in the moment, we should always be mindful about which stock to pick and what would be the exposure and the timing of our position. Over the past few days, the price action of HYMC has brought the stock to $2.26. Before the stabilization around $2, the short-term price and trend of Hycroft mining has been bullish because recently the market showed a lot of interest of the potential for the stock that reached its new high, and that interest has been managed to stay to hold its ground against the possible mouse sell off from existing shareholder before the takeoff. I think that the stock is going to have been even greater surge in the future of the volume of HYMC. Remain the stock strong and the stock seems to be regrouping for more momentum. In this week have come when we look at the long-term price trend of the Hycroft mining. It has been bullish as well as the stock has been making new highs left and right, and there is no reason currently to believe that it shouldn't continue this movement. As we go forward in the general environment with the significant selling pressure, I think that HYMC he can bring such more needed changes for ambition and the movement in our portfolio. Now let's take a look at the technical of the stock. The trading volume of aircraft mining has been recently been 16 million share versus an average volume of 89 million share. Over the previous to a week period, it has been price fluctuated between 28 cents and $4.37. The market cap of Hycroft mining is currently at $429 million compared to enterprise's value of $196 million. The difference between market cap and enterprise's value is the premium or discount. The financial market is willing to allocate the company based on its current fundamental leverage and asset composition. The enterprise's value is the combined value of the company assets and minus debt. If the company has a line of debt or a negative image among the market participants, the market value may be impaired. With them being said, at the end of the day, it remains an estimate of the market every time it is published its financial statement, so it's less reactive than the market cap and often more lenient from many other companies. One key element to note regarding the enterprise values that may for many growth company type companies or one of the most significant asset they come own is the goodwill is an exploitation of the market cap that a company can generate more profit to grow faster because it high have a better management team, a stronger brand recognition and a bigger online following. It is what's make the company unique compared to its competitor. In other words, the goodwill is not a tangible asset that the company may use it often. However, the reason why some companies are priced to be trading at a discount because the market count is lower than the enterprise's value and the enterprise's value is less reactive than the market cap in a volatile situation. If the company goes the liquidation, that the goodwill will be gone with the bond holder and the shareholder will be left sharing among the each other whatever that is not, which is far less compared to the number of the balance sheet. When we compare the current price to its historical price fluctuation, the stock is 81% higher than its 1 month low, 608% higher than the 12-week low, and 608% higher than the 52-week low on the option market, which is often give us a hint about the market sentiment on where the stock price is likely to going to the next. If the implied volatile is 81% versus a historical volatile of 608%. The put call volume ratio is currently at 0.33 and it's normal for many stock to have a higher production volume than what they truly deserve, as many institutional investors sentimentally held their loan position by buying put option. The most recent volume option treated has been 2000 contract a day compared to 30-day average of 43. In terms of open interest, the most recent volume of open interest has spent 3 lakh 3,000 contract versus the 30-day average of 1,92,000 contract. In the term of its shareholder structure, the institutional shareholder own about 18% of current float, and the biggest shareholder include the Norma, White Box, and the Vanguard. It relevant to the understand shareholder composition of the company. Asked this help us to determine if the stock is a long-term investment or should be simply viewed as a trade opportunity. If the stock is mainly held by the retailer trade, this is a sign that the stock lots and the debt justify long-term trust from shareholders. Typically, the consensus is that there should be at least 25 to 30% of institutional participant of the stock to be perceived as a sound investment and not just a short-term trade. There is obviously a lot of expectation to this is a many great company are also mostly held by the retailer investor, but the trend to be the expectation is not to rule. Let's also take a look at the short interest present in this stock, which is the most amount of position among the profit. If the share price falls lower sometime when there are significant short interest in the total volume, this is that the sign sometime more organized may be going to on the like what they been going with the termin GameStop, AMC, so on. The current short interest is about 7% of total float and the 53% of usually coming out the dark pool. Usually if the short interest is about 12% of total volume and significant chunk of short volume coming out the dark pools, this may be a red flag with that institutional position have been taken a position against it, and there will be a potential that short switch by the position given all the analysis is the by high HYMC, because it's matter of time in my opinion before the current pass is going and the add to the end of volatile that kick is once again, and the stock may be too high to commit all your capital, but I would say that now the decent entry point considering the context we're in. Of course, always be the mindful that the volatile may be beneficial or drag it on downward. So the always structure you trade having this through in your mind. I would recommend a commit between 1 to 3% of portfolio in the HYMC, and I would also recommend the split of location in batches to 10 to 20% at a time, so that you may be purchase more afterward in if it portways us. Now given us current market environment, I believe that the equity market is initially fast pace of correction, especially when it comes to the tech and the growth time equity. The financial market has been living and creation briefing thanks to the continuous creation of new capital with the different waves of quantitative easing, which has been consoled on the price exits of the their world. So I ended the video. Thank you for the watching the video on Money Trader channel. Thanks for watching.